Hi guys, welcome to today's webinar series, which is in partnership with our sponsor broker Ingot Africa Ltd. Today we are going to be focusing more on commodity futures, with our guest speaker being Al-Nawaz Nurani. Welcome.
Thank you, Ashley, for joining. We're giving guys a couple of minutes, then we start. We're also waiting for our guest, Al-Nawaz. So we start at exactly 3 p.m. Yeah, we can hear you. How are you?
I am fine, thank you. I'm seeing that my audio is not working well. Give me a second.
All right.
Let's see.
I'm also giving you access to share screen because during the live analysis, I think you'll have
still
to
on my
share your screen.
speaker instead of being on my headset.
Okay. Yeah, loud and clear.
Okay,
it's better.
perfect. Now I can hear you much better as well. Okay, here we go.
Yeah. Shall we have some of the students joining in, or it's just you and Ashley for today?
It's me and Ashley. I don't know if some of my students will join in. I have no idea.
All right.
So I have disseminated through WhatsApp and stuff, but most of my students, they get bored by listening to me over and over again.
Yeah. All right.
So yeah, this is the way it is. And who's the lady who's sitting next to you?
She's my colleague Faith. She can introduce herself.
Hi.
Okay. Hi, how are you doing? Your name is?
My name is Faith.
Oh, Faith. Okay. Hi, Faith. Nice meeting you.
Pleasure.
Yeah.
Okay.
So we'll just start right off the bat because we only have like 40 minutes. And then
correct.
We'll share the recording with you for those of us who would have wished to join, but for some reason they won't manage to join us. Yeah.
Sure.
All right. So
Perfect.
I just want to welcome everybody to today's live trading session. We'll be speaking to Al-Nawaz. Al-Nawaz is a second time on our trading lounge guest. He is a specialist and an expert on commodity futures. We're truly honored to have you back on the lounge, especially with short notice.
Yes.
Yeah. All right.
Okay, so
thank you. First of all, Sylvia, thank you for having me on board. My pleasure, always working with you. It's a pleasure. So yeah, I love being here. Thank you.
So the first question will be, what is a trading pit in context of futures?
So if I understand your question correctly, you mean what is futures trading, generally speaking?
Yeah, and also what defines a futures contract?
Okay. A futures contract is actually an agreement between two parties. And one of the examples that I like giving everyone is, between Java and, let's say, a coffee farmer, for example. So Java would, would approach the coffee farmer and they would say, okay, when are you harvesting your coffee? And let's say, so let's take this example, and let's say, Faith, you are Java and I'm, a coffee farmer. So you would approach me and you say, okay, Al-Nawaz, when are you harvesting your coffee? And I would say, okay, by next March, I'm harvesting my coffee. And we come to an agreement. The agreement would be that if today's price of coffee per kg is 100 shillings, for argument's sake, then we sign a contract. And there is an agreement between you and myself. And then come March, I deliver to you the coffee and you pay me per kg 100 shillings. Now, if the price by March has gone up, then I, as a farmer, will take the hit. And if the price has gone down, then you, as Java, will take the hit because our agreement is 100 shillings per kg. So whatever our agreement has been, we have to honor that agreement. You understand? So we are just, that is what basically a futures contract is. So now what we are trying to do is we are trying to see, like any other kind of trading, people normally want to have as many instruments as possible, and people will start having, futures contract on weather, futures contract on oil, on sugar, on meat. There's so many contracts, and they fall under different category. I specialize in the index of which is the S&P 500, which is called the E-mini futures. And what is an E-mini futures? An E-mini futures contract is basically a juice that they have taken out of the top 500 companies in the US. And each company has to have assets, minimum assets worth $300 billion. So basically, what the CME, which is the Chicago Mercantile Exchange, when they released this futures contract, what they did was they took the top 500 companies in the US, and then what they did was they basically put it in a blender, take a juice out of it, and they came up with one juice, and that juice is the S&P 500. It's one contract, which is a summary of all the other 500 top companies in the US. And that is what we are trading. So basically, one of the advantages of trading the futures or any futures contract is that, first of all, you need less capital. And because it is a derivative, it is something that is calculated a little differently than if it is a stock for exchange. For example, so if you're trading Safaricom, for example, and Safaricom goes belly up, or equity stock or brewery stock, your whole portfolio is gone. Whereas when you are trading something like an index like S&P 500, it has more stability because it is an amalgamation of 500 top countries that we are basically trading, right?
Yeah.
So hopefully, Faith, this gives you an insight on what a futures contract is. So in essence, it's just a contract between two parties. And when that contract comes to term, technically you have to deliver. If it is coffee, you have to deliver that commodity in exchange. You have to honor the contract. Let's put it that way. Okay. What else can I help you with?
How does the geopolitical risk affect commodity futures?
Everything will affect trading. Okay, no matter how stable it is. If there is an earthquake that happens in, I don't know, in Kenya or along the Rift Valley, it's going to affect, Kenyan stock, for example, or the equity market or whatever is there. This is no different. If, let's say, you are trading the oil futures, and tomorrow the OPEC, conglomeration comes and decides to reduce the output of, thousands of or millions of oil barrels that they release or produce per day, and they say we are going to reduce that quantity, it's going to affect the price of oil, and therefore it's going to affect the price of the futures contract for oil as well. So we are not spared by geopolitical events that will happen around us. It will affect us one way or the other, sadly. So in trading, there is nothing that is foolproof, so to speak.
Well answered. Well,
The only difference, sorry, Sylvia, the only difference I would say is if you are trading a market which is regulated versus a market that is unregulated, that would, that is where you should consider, am I trading an instrument which is controlled by a central government body that gives that instrument more stability? So the example I can give you, if you look at a futures contract, for example, even forget futures contract, look at the stock market. If you look at the Kenya and the Nairobi Stock Exchange, it is, overseen by the CMA, which is actually the authority in Kenya that oversees the stock market and basically the financial market. So for that particular reason, you want to trade an instrument whether it's a futures contract or whether it's treasuries or whether it's options, bonds, whatever it is, that is overseen by an authority so that you know that there is less manipulation and at the same time, there is stability in it. And at the same time, you know, like in my case, I do order flow, I read the order flow of the market. That is my trading style. So when I'm getting this order flow of the market and it's coming from a body that is regulating, like Nairobi Stock Exchange, for example, that is regulated, I should say, then I know that there is less risk of manipulation in this kind of instance compared to, let's say, crypto, which is not regulated, for instance, right? And that's why you see such a huge fluctuation in the crypto market, for example, because crypto is very different, it's unregulated, and there is room for a lot of manipulation in those instances.
All right. Just to also mention our sponsor broker, people who are watching this webinar and people who will watch this webinar can be able to trade the stocks on S&P 500, as Al-Nawaz is explaining, but as CFDs, basically, as a fraction of those particular stocks. And also, just to also add, like right now, there's actually crypto regulation in Kenya via brokers such as Ingot. They do allow for crypto trading via HISA, so it's actually something that people can look out and watch in the future. So maybe just to specify between our followers, you can, before we go to the live trading analysis, and I know you're an order flow trader, trend following, big on technical analysis, you can just tell our audience the difference, just in a like a snapshot, the difference between spot FX and versus futures commodities.
Absolutely.
Yeah.
Absolutely. The main difference between, if we look at spot Forex, basically, Forex is, you know, a trading or a market where you are actually trading a pair of currency. So let's say you are pairing the US dollars versus the euro, or the US dollar versus the yen, or versus the pound, and so on and so forth. So basically, what you are trying to do is you are doing what you would do as a person. Let's say you have US dollars and you going to the bank and you want to exchange the US dollars in exchange for Kenyan shillings or for any other. Why are we disappearing? Are you okay, Sylvia?
Yeah. We're good.
Okay.
Yeah, we're good.
Okay. So that is what basically spot Forex is all about. Plus, the other thing is that spot Forex does not have a central body that regulates it, as I mentioned earlier. Now, futures is a different beast altogether. If we look at spot Forex, we are looking at, you know, 10, 12 trillion dollars a day, you know, turnover. And I remember when I started trading, because initially I started trading stocks, then I got into Forex, and then eventually I moved on into futures trading. So, sorry. So when I started with, you know, stock trading, and then when I moved to Forex, the market was worth maybe $3 trillion, $4 trillion turnover. And in the past 20 years or so, the market has gone from 3-4 trillion, it has actually tripled. So you can see that, you know, it's a huge, a humongous market. Futures market basically is more of a regulated market. It's not as big as the Forex market. The other thing is that in futures, you don't have, nowadays you have the possibility of having a micro contract that you can trade, which is not as simple as the micro contract that you would have, or micro lot size that you would have in Forex, for example. You see, I personally find, though I trade futures, I find that in Forex, it allows you to have a better money management than in futures. But that doesn't mean that you don't have any money management in futures. We do implement stringent money management when we are teaching, because without money management, there is no trading.
All right. Right now, I think, Al-Nawaz, you can share your screen. You can take us through your most recent trades, especially when it comes to both. Now we're speaking to retail traders, but I think the same concepts can be applied to an institutional, like a fund manager and whatnot.
Absolutely. I have a trade that was taken, I believe, if I remember, yesterday. I think this is one of my trades.
Yeah. You can give us like a winning trade and a losing trade, a combination of both.
Actually, I just took one trade because yesterday I was having problems with my platform. So I have this one trade here.
In the course of the week, perhaps we can go back like a week.
I just have this yesterday. This week has been been horrendous. But can you see my screen?
Yes. Yeah.
Okay, let me just first of all move around. Okay, so you can see my my screen.
Yeah.
You can see my trade.
Screenshots. Yeah.
Okay, you can see my screenshot, right?
Yeah.
So let me just bring it here, and let's go over this for a moment. So basically, what I'm trying to show you is that if you can see my cursor moving around.
Yeah, we can see the presentation on the Word document, and no cursor.
No, it's not the presentation. There is. Do you see this screen?
The screen, yes. Yeah, sure.
You see my chart?
Yeah.
Okay. So when you look at my chart, you know, with the order flow of the market, I was reading in this area, and I could see that, you know, buyers have started to come in. And I could see in the order flow that the market now has started to move upwards because, you know, buyers have started swinging in. And then as soon as that happened, I entered a long trade. And this was a trade which, you know, I like here, first of all, you can see I've entered this trade. This was a small trade, only one contract that I had entered with. And it had given me from 60.75, it had given me about 6-7 ticks. Actually, this was two contracts that I had entered with. And as you can see, 6-7 ticks. If you're looking at Forex, for example, just to compare it, if you look at Forex, it would be the equivalent of 6 or 7 pips. And this was like 7 pips that I was positive, 2 contracts. Each contract, the tick value, we call it ticks, Faith, for your information. We call it ticks in futures or in stock trading. In Forex trading, it's called pips. So it's exactly the same thing. It is the smallest denomination by which the market is moving up or down. So 7 ticks, $150 with some other trades that I had taken. Now that one was entered with a bigger position. And as you can see, in total, you know, I was up by $612.50. And I think I ended up the day with somewhere close to $800-900.
All right. That's pretty good statistics. And then you can also see the order flow and how the strength of the trend is actually being on an uptrend based on your most recent stock. I think
yes.
How do traders use moving averages in technical analysis while trading futures?
Actually, very good question. We don't use moving averages to analyze anything. The way I use the moving averages, for example, is just as a visual aid only. I don't care what moving average is there. I don't care. You know, some people use, if you look at it, some people will use a 21 moving average. Someone will use a 34 moving average. Some people use a 50 and 100 moving average. It doesn't matter what moving average you are using. For me, when I look at it, is I'm just looking at the visual aspect of, you know, what I'm trying to see. And that visual aspect is just, you know, to give me more confidence that whatever I'm reading on the tape is actually matching visually what I see on the chart. That's all.
All right.
So
And
whatever moving average works for you, you can use it.
all right. And then maybe you can also just clarify for us your risk parameters where you do your entries and your exit on particular chart. Of course, making use of the order flow, and it's on an upward trending.
Okay, that's a good question, because you see, one thing that I have realized as far as I am concerned as a trader, you know, most people, they are looking. Now, when we trade, we are always looking for certain ratios. We are looking for a ratio, you know, some people will use Fibonacci, some people will use Fibonacci extensions, some people will use what we call support and resistance, some people use supply and demand zones. It's basically the same thing. You know, nothing changes. So the bottom line is what suits your temperament. That is what is the most important thing. Now, when I look at my trading, what I really like doing first and foremost is that I like to use certain ratios. So if, let's say, I'm risking 10 ticks as a stop loss, then I want to make sure that I'm going to at least look for a trade where I'll be able to make 20 or 30 ticks out of it. Now, one of the advantages that I've found by using this methodology, which is what you know, most people are doing, is that if, let's say, you have one losing trade and you lose 10 ticks, and let's say you have a second trade and you lose another 10 ticks, so now you're 20 ticks down. But what happens is when you take your third trade, for example, and you know that you have a ratio of 3 to 1, you know that not third trade, if it's going to be a winning trade, you're going to recover all your money and you're going to make some money. So what it does is psychologically, it affects you in a positive manner. You don't get, how can I say, you don't get depressed and say, oh, you know, I've lost one trade, I've lost 2 trades, now it's going to happen, you know, I'm down 20 ticks. It's okay, because you are looking for very specific trades where you're going to get certain ratios, and you know that whatever you have lost, it's only a matter of taking 1 or 2 trades and you have recovered all your money. Okay, so that is my personality. By nature, I am a scalper. So what I mean by a scalper is I enter, you know, a high number of contracts, but I'm trying to look at maybe 5 ticks, 7 ticks, 10, 12 ticks in the market. I'm rarely trying to get to those levels where I'm going to look for 50 ticks, because the comparison I can give you is when you are trading, you are in the market. You are in the middle of traffic. So if you're crossing the road or the highway, and you come and you stay in the middle of the highway as a pedestrian, you have a high chance of getting hit by a car. Okay? So my philosophy is that you get in and you get out quickly. But when we are teaching all types of trading, because as we all know, every person has his or her personality. And that personality, when we mentor people, we actually look at that personality. We do a little bit of neuro-linguistic programming to see what is the personality of my student. And therefore, based on that, I'm going to tell you, Sylvia, I think your nature or your temperament is more, you're going to be a better intraday trader. You can be a swing trader, or maybe Faith, you're just a scalper. So you know what? Just stay as a scalper. Don't try and, you know, do anything else. And of course, with time, you are going to change, because there will come a time when you outgrow whatever you have, you know, you have been doing. And then, you know, you with confidence and more learning and more experience, you'll say, okay, I want to, you know, divert from being a scalper, and I want to become more of an intraday trader. Like I went through those processes as well. And now I can still be an intraday trader if I want to, but I just enjoy being a scalper because you're quickly in and out.
All right. Thank you for highlighting on your trading strategy. So maybe also you can also touch on different strategy providers, or not strategy providers, but different trading strategies. As you have mentioned, you're more of a scalper. You can also mention the holding time periods for different strategies, and especially on technical analysis, so that also guys can be able to gauge for themselves where they would classify themselves under. And also maybe if you have a recent chart on, because today I think you've also touched on the index S&P 500 E-mini futures. If you have like a chart, a previous chart on maybe a commodity metal such as gold or silver, or any other. You've also touched on coffee, which is an agricultural commodity future. So maybe we can also look at another chart analysis as
Actually, I don't have any other chart because I don't trade anything else. I just trade only one thing, and it's the only S&P 500 is the only thing I trade.
Okay.
So for that reason, I sadly, I don't have any other charts, because my philosophy about trading is very simple. You don't need to trade many things in order to make money. One of the pitfalls that Forex traders fall under is the fact that they want to trade all the exotic pairs that are available. They want to trade all the major pairs that are available. And you can end up like with over 70 charts on your screen, and you are wondering, am I trading the US with the Mexican pesos, or am I trading the Kenya shilling with the African rand? What am I doing? I believe my philosophy is very simple. I've been trading, let's say, the S&P 500 now for 17, 18 years, okay? And that is the only thing I trade. I don't trade anything else. The reason is very simple. If you're trading one instrument, you learn to understand the temperament of that instrument. So the example I like giving is, let's say if, you know, Faith, let's say you're married or you have a boyfriend. By spending time with that person, you get to understand the you know, nature of, you know, the gentleman that you are, you know, meeting. If you start talking to 10 different people, you'll have 10 different personalities that you have to deal with. And then when the time comes, it will leave you, you know, holding your head and wondering, who is the guy for me, right? Whereas one person is the best thing to do, right? Trading is the same thing. Now, one of the things which is very important is that you want to make more money, increase your position size. I'll give you an example. If you trade and you are trading one contract in S&P 500, the tick value is $12.50 per tick. You make 5 ticks, you've made $62.50. You take out your commission, you're left with about $58. Now, $58 might not be too much for someone, because they might say, yeah, it's around maybe 6,500, 7,000 shillings. That's okay. But now imagine you're trading 10 contracts. So that 5,800 shillings is now 58,000 shillings, because you have increased your position size by 10 contracts. Now, let's say you are trading 50 contracts. So basically, what you need to develop in the market is consistency. You need to have a system that works for you, which is what we mentor people in. This is what we teach people, that if you apply this kind of strategy, you are going to, be able to make 10 ticks, 5 ticks, 20 ticks per day. And then when you increase your position size, you're going to multiply that amount by the number of contracts that you have been trading. So therefore, you don't need to trade everything that is, tradable. And that is, some people I see are trading gold, are trading oil, are trading silver, are trading crypto, are trading Forex. Oh my God, it's what a headache when you start trading so many instruments, because you'll never understand the personality of, each and every instrument. It takes years to master the personality. Just Sylvia, you can tell me that if I'm wrong.
Yeah, right.
You've been married, you know what it is, right?
You're right on
So
specializing on what works for you, and that's really
exactly.
and
Exactly.
and now I think the last few minutes we can take questions from our attendees.
Sure.
I can see
Sure.
Makena and Wanjohi, so that we can
Yes.
also give them a chance to get
Okay.
some value from this webinar.
I would also like to take a moment to say hi to McKenna, because I know her.
Yeah.
Hi, McKenna. Hope you're doing well.
All right.
Okay.
Let me.
Hi, I'm well.
Thanks,
Good to
Victoria.
see you. Good to see you. Yeah.
Likewise, Victoria.
Do you have a question?
No, I don't.
All right. How about Wanjohi, Ashley?
Ashley, she's trading away. She's busy with
All
her
right.
trades.
All right. So at this point, I'd like to thank you, Al-Nawaz, for your time. I
My
would
pleasure.
also like to mention that you have a trading academy located
Yes.
at Money Plaza in Parklands. For any one of you who wish to trade commodity futures, we do recommend highly as for person coach, that is. We also wish to thank our responsible broker who has given us time and also the ability to have our traders trade commodity futures as well on their trading platform, Ingot Africa Ltd. Kenya. We're located at Delta 4th floor. So for future webinars, guys, just follow us on our socials, on our YouTube channels. And of course, we'd love to host you again, Al-Nawaz, in the future.
My pleasure.
Also,
Anytime.
we do like a physical seminar with you if your time allows. The next year, you're very much welcome. And
Absolutely. I would be delighted to do that. And I think that's a great idea, because I think then I would be able to have the pulse of the attendees.
yeah,
And then that will be more of an interactive session. And maybe we can look into it.
yeah.
I'm always open to that. So absolutely, I would love to do that.
Yeah, we'll discuss more on phone about that and future
Sure.
plans. Thank you guys for joining us in today's webinar session. Al-Nawaz has taken us through the importance of specializing on one asset class. We've discussed in depth about the S&P E-mini futures, S&P 500 for futures contracts. And we want to thank Ingot Africa Limited, Ingot Kenya, for allowing us to be able to do this webinar. And guys, if you wish to trade commodity futures, you can get started today.